How do you find enough investors to close your round? If you're like 99% of founders seeking investment, you probably don't have a ready-made network of investors queuing up waiting to invest in your venture. Seeking out an investor who's likely to invest in your business is tough. Finding enough of them so that you can actually close your round is even harder. The thing is, founders are massively underestimating the scale of the investor outreach they need to do to close their round quickly and on the best terms. Most founders I speak to reach out to 10 or 20 investors. They hear nothing back from most and get a handful of no's from the rest. Then they'll hit a brick wall. The founders who close their round are the ones who reach out to investors at scale. In order to do this, you need to approach investor outreach like any other marketing campaign. You need to create a marketing funnel and you need to stimulate demand. You have to load potential investors in at the top of the funnel, expecting them to work their way through key phases of the investment campaign. An initial pitch, some second and third meetings, an expression of interest, and finally due diligence and closing the deal. Of course, we expect many investors to drop out at every stage, so we need to reach out to many more than we expect to invest. Typically, this figure is in the hundreds of investors. 10 to 20 just isn't going to cut it. But the way in which you reach out to these investors has a massive impact on the conversion rate through the funnel. Do it wrong and you're wasting your time. It won't matter how many investors you reach out to. Do it right and you'll get better than average response rates, and you'll need to do less investor outreach to close your round. So the question is, what investor outreach tactics actually work? Well, there are only really 4 tactics that I see consistently delivering results. Warm introductions, personalized and researched outreach, applications to funds and angel groups, and posting about your round on social media. That's it. Nothing else works. Generic copy and pasted emails, asking for investment within LinkedIn connection requests, spamming cold databases and mailing lists, and seed stage investment brokers or platforms just don't work. You should start your outreach by focusing on warm introductions. This is the golden ticket. It always yields the best results. Take your investor target list and try to find someone in your network who can introduce you. Or ask your network if they know of any investors that might be interested in your round. Most investors will always make time for a warm introduction from a trusted source. So it's worth starting to build a personal network of founders, investors, and advisors in the startup space as early as you can. Personalized and researched outreach is the next best approach. But be warned, your goal of this outreach is to build a relationship, not pitch your investment. If you're going to reach out cold to an investor, tell them why you've done so. Make them feel special. Explain to them that you realize they've made some investments in businesses at the same stage of development to you, that those businesses were within the same niche, and that you think they might like what you're building. I've found that by asking them to opt in to learn more, rather than giving them the hard sell from the off, you'll get a much better response. You can then build the relationship from there and move the conversation towards an opportunity to pitch. The next tactic that will work is reaching out to investment funds and angel groups. But much like the investor outreach, these funds have to specialize in your stage of development and your niche. So make sure you do your research before you contact them. When you do get in touch, explain why you think you'll be a good fit for their fund. Make sure you get clear on what their process is. Finally, you have social media. Being very public about your raise on social media can unlock what I call hidden investors. These are people in your network that already know, like, and trust you, but you have no idea they invest. They could be your ex-boss, a friend, or someone you met at a networking event years ago and has been following your journey ever since. Regardless of who, the point is they don't go around shouting about being an angel investor. They're not on any list or in any database. It's not listed on their bio, and they don't go around shouting about it. By posting about your round publicly, 2 things will happen. First, you attract these hidden investors who comment on your posts or DM you asking for more info. And secondly, you open conversations with people in your network who feel they can make an introduction to someone that they know who might be interested in investing. If you focus on executing these 4 tactics at scale, you'll quickly start building momentum in your investor outreach. You'll fill your funnel and you'll be much more likely to find the number of investors you're going to need to close your round. So stop looking for the copy and pasted shortcuts of pre-built lists, introduction platforms and brokers. Raising investment is probably the biggest transaction you've ever been involved with professionally. No one in their right mind is going to hand over hundreds of thousands of their cash to a stranger who pitched to them via a copy and pasted message in a LinkedIn connection request.